afternoon. Welcome to Chartbusters. I'm National D'Souza. Joining me as always, Mangala Malu. Well, Mangala, markets more or less flattish. Not such a bad outcome after the big run that we saw in late trade yesterday. But a lot of stocks are moving around. And one such stock is Metropolis. Those are the details that are coming up for you on the screen. Sources tell us that the IT department is conducting searches at that company. Timsy joins us to fill us in with what all she's picking up. Timsy.
Well, as you rightly said, what sources are indicating right now is that the Income Tax Department has been conducting search operations at Metropolis Path Labs. These searches are underway since early morning today at some of the outlets also of Metropolis Path Labs. Also, headquarters are covered. However, more details are awaited. But yes, this is part of the ongoing investigations that IT Department has been conducting at various pharma-related agencies, networks, etc., where IT department has been saying that, yes, they are getting follow-up leads from a lot of areas where investigations were going on, which are linked to hospitals, to path labs, to pharma companies, etc. So let's see what are the finer details, whether this is linked to any existing investigation which is going on, or this is a new investigation where they've unearthed some unaccounted income. That is something that we'll have to wait and watch for. But yes, as of now, search operations currently underway in Mumbai.
Timsy, thanks a lot for that. The stock market's taken note of that. The stock is down 5%. In fact, it's been under pressure all this morning. As we speak, it's meandering around the lower end of today's trading session. This week, it's down 8%. And this is not good news for those who've been holding Metropolis from the start of this year itself. It's seen a correction of almost 55, 60% from the top. Important to watch out for details emanating from that IT search which is taking place out there, as Timsy pointed out. A bunch of stocks which are buzzing around. We do have, a few of them at the low point of trade. Tata Power is the one from the F&O space, which is currently trudging around the lower end of today's trading session. But we do have a bunch of PSUs doing well. NBCC, NCC, BHEL, all of them are at the high point this morning. A steady listing coming in as well. Two new listings today. We had Bikaji as well as Medanta. Let's talk about Bikaji as well itself. Steady listing, Indian ethnic snacks maker. The stock is higher by almost 10% on debut. The CFO of the company, Rishabh Jain, now joins in to tell us more about the plans of the company going forward. Rishabh, thank you for joining in. I remember you coming here, on the day the IPO opened. You said that at full capacity, you can do 3,500 crores worth revenue with double-digit margins at scale. Now that things have opened up, the street's eyeing what you're doing. Just wanted to understand, what is your target for that 3,500 crore rupee on the top line with double-digit margins? I mean, does it happen in FY24? Does it happen in FY25? Can you give us a sense of the timing?
Yeah, so thank you very much for giving us opportunity. It's always pleasure coming to with you live. And so see, last 3-4 years we're growing at 22% CAGR, and it's a big industry. So this industry is close to 1.5 lakh crore of markets, and we are just a 600 crore rupees. We're done, and it's a strong growth prospect which we looks in the coming decade, and it's a big industry, and we being done expansion across all part of India in the last 2 years. So we are very much hopeful that we'll do a same business, same growth in coming years also, and it's a big opportunity for us.
All right, Rishabh, it seems the street has enjoyed the snack because the stock has opened up well in the green. So that's pretty good news. Your past performance we have, but give us some concrete numbers.
Yeah.
For this year, you're saying you'll grow by at least 20% on the top line. Earlier you were in the silent period, so we didn't want to probe you too much. Now we want those numbers. And the double-digit margin will come in the second half of this year?
So see, in first quarter, we are growing at 25% plus growth in first quarter, which has been reported in our RHP and prospectus. So yeah, that's a strong growth. And this year also, the festive is very good. So we are looking strong growth this year. And margin perspective, yeah, so say from second quarter onward, we are seeing cooling of the prices of all the key prices, including edible oil. So we are looking at double-digit type of margin in second half of the year.
Double-digit margin in the second half of this year, and you said 20% plus growth in the first half. So this year itself, you'll cross the 2,000 crore mark on the top line. Is that correct? Okay, and I'm just...
yeah, so that's what we are intending.
Right. I was just doing some math on your growth prospects going forward. It seems that if you continue to grow at this rate with the capacity headroom that you have, optimum revenue of close to around 3,600 crores would come by 25, 26. Is that a reasonable assumption?
Yeah, that's what our target is. So ultimately, we want to grow at the. So we have always outperformed our industry growth. So industry growing at 15% in next, we will grow at 15% next 4-5 years, and we always outperformed in last many years. So that's what our target is, and we want to grow at the same pace.
Okay, so by FY26 you will have revenues of upwards of 3,500 crores.
Okay, all right. Tell us about your...
And also from expansion.
Go ahead.
Expansion perspective, so we have grown. We have done an expansion in last 2 years, and we've done a capacity which will suffice to have a turnover of close to 4,000 crore rupees. So we doesn't need to have further capex, major capex going on for next at least 3-4 years.
Okay, all right. You know, bulk of your money comes in from your 3 core states. If you could tell us, how do you see this mix change going ahead? Your non-core market will contribute how much of your revenues? And if that is the case, then will it be margin dilutive as you go out of your comfort zone, so to call it?
See, currently our core market is giving close to 72% of our business, and the focus market are giving close to 17-18% of our business. So yeah, of course, so focus is always growing at 1.5 to 2 times of core market. So in next 3-4 years, it will this 17-18% will target to grow this to 20-23%. And from margin perspective, there is not much gap between core and focus, because focus market are also nearby Rajasthan, like Haryana, Punjab, UP. So, and also we came up with plant in UP to improve on supply chain, improve on logistic costs. So there will not be have much impact on a margin from that perspective.
All right. It's interesting that, you know, you are looking at all states around Rajasthan, but you're not looking at Gujarat. Is that because Gujarat has its own, local snacking industry? It's extremely competitive. And because Gujarat is close to Maharashtra, we see a lot of that competition in Maharashtra as well. But these 2 states are the largest snacks consumers in the country. Your presence, or your rather absence out there, is kind of quizzical, no?
So see, UP, Gujarat and MP, these 3 are the biggest market, out of which UP is the biggest in India.
Okay.
And we have selected UP as a focus market. So as a strategy, we have selected 6 states at a time which we want to make it, which we want to focus on for next 3 years at least. And that's what our target is. And of course, we are present in Gujarat, we are present in Maharashtra, we are present across 23 states. But yeah, our focus will be in 6 states, which will be UP, Haryana, Punjab, Delhi, and in South, Karnataka and Telangana. That's our focus is for at least next 3 years.
Okay, all right. Rishabh, will you do 110 crores of profit in FY24?
So see, this FY23, our target is to do a normalized EBITDA, and that's what target is. In next 3-4 years, we want to increase our EBITDA from 2 perspective. One, of course, we'll have a purchasing power which will built in when our turnover will grow and our purchasing power will grow, and there's a fixed cost sitting in our books because we are currently underutilized.
No,
so
Rishabh,
once we utilize this capacity, there will be efficiency, improvisation.
Rishabh, let's try again.
Yeah.
You know, last year you did around 76 crores of profit, net profit, right?
Yes.
Right.
Yes.
Rishabh, we are enjoying the snack, but tell us, what is it? 110 crores will you do in FY24? Valuation-wise, things are looking stretched. So I ask you whether your profitability can go from around 76 crores in the last year, and in the next couple of years, can it go to around that 110 crores odd mark? That's something that the street wants to know. Go ahead, Rishabh.
Yeah, so see, very comfortably. This in FY23 also we are targeting the same growth and this type of numbers in FY23. That's what our target is.
So I'll give you the numbers for your, if you can correct us if our calculation out here is incorrect, or our expectation or deduction from what you said. So this year you do about 2,000 crores plus in top line. Next year, growing 20% on that gives you 2,400 crores. 2,400 crores at 10% margin will give you an EBITDA of almost 240 crores. Reduce your depreciation, tax, etc. from there.
Right.
120 to 130 crores PAT in FY24 is possible, right?
Very much.
Very much. Because on the basis of
Very
that, your stock is currently trading at around 60 times. So that is why
so
we're asking you
basically 240, 250 crore of EBITDA will have close. Yeah, 240, 250 crore EBITDA will have close to 130, 140 crore of PAT.
Okay.
Because depreciation close to 40, 45 crore, that's it.
Perfect. That sounds reasonable. And finally, how much will you spend on expanding distribution every year? You said that you will be spending about 1.75 to 2% of your sales on advertising. On distribution expansion, how much will you spend every year?
See, so basically that's a budget on ad. Basically, in distribution expansion, we started continue. It's a continuous business, and we didn't need to invest. Basically, in like focus market, we are investing close to 1.5% extra. We giving to distribution, distributor trade margin or retailer margin extra 1.5%. That's it. Other than this, there is no major investment in distribution.
Okay.
We are focusing on technology. We are focusing on DMS. That's a focus we are doing in creating a new markets.
Okay, all right, Rishabh. Thanks so much for joining in, giving us some numbers. We'll hold you at that. Remember the next time we chat. But good to speak to you. 2,000 crores for this year.
Sure.
Next year, 20% growth is what you're talking about. Double-digit margins, and you're sounding pretty confident that you can do 130 crores odd of net profit in FY24. It's been good speaking to you. Congratulations on the listing. A lot of people who applied in that IPO will be pretty happy.
Sure.
Okay.
Sure. Thank you very much.
All right. Most welcome. Well, on that note, let's move on to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that he's tracking rather closely. Sachin.
The stock in focus is Hyderabad Industries Limited, or HIL, which operates in the building material industry. Well, the Q2 results of the company are already out, and it was on the expected lines. Well, the September quarter revenues of the company were largely flat on a year-on-year basis. However, the margins took a major hit due to a variety of reasons. The roofing solution business of the company held firm despite the seasonal slowdown. In terms of the polymer solutions business, the company witnessed a very drastic reduction in terms of top line and also reported an inventory loss due to the drop in PVC prices. The management expects the situation to normalize in the next 2 to 3 months and therefore expects recovery in the business from Q4 onwards. On the export front as well, the business in Europe, primarily the Parador Holding, which is the flooring solution business of the company, is facing multiple challenges due to the ongoing energy crisis in Europe. The business reported an operating loss on that front, and that also had a negative impact in terms of the margins. Overall, there are a lot of negatives surrounding the stock, but the good news is that the stock has already corrected more than 50% from its all-time highs and is currently trading at valuations of around 10 times FY24 normalized earnings, which makes it an attractive bet at current levels.
Take that point. Thanks a lot, Sachin, for joining in. With that, we'll slip into a short break. On the other side, we have another listing today. The management of Global Health will be...
Welcome back to Chartbusters here on CNBC-TV18. Well, we just had one company that debuted today and listed with good gains, but the real standout performer has been Global Health. Those stock, in fact, have seen a big rally. It's locked in upper circuit up close to around 20%. The chairman and managing director, Mr. Naresh Trehan, as well as the group CEO, Mr. Pankaj Saini, they join us on the show. Hi, Mr. Trehan, as well as Mr. Saini. Thanks so much for joining in. And congratulations on a solid listing. You know, a lot of those IPO applicants, they'll be very happy today to see the kind of listing. But that's putting even more emphasis now on the numbers that you all will deliver. The expectations will skyrocket in line with what the share price has done. Give us a couple of details. The occupancies, well, they were hovering around 60% odd. If you could tell us, what's the number that we should be working with for the second half of this year? And your average revenue per occupied bed. That was around that 59,000-60,000 odd. Where is that number headed?
So when you look at our occupancy figures, it's important to understand that we're currently having 5 hospitals which are operational and the 6th one in Noida under construction. Our hospitals in Lucknow, which is approximately going to be 1,000 beds by the time it's done, and our hospital in Patna, which is about 650 beds by the time it's done. Both of these hospitals are only about 50% in terms of their built-out capacity today. So we continue to add in beds over the course of the next couple of months. That will continue on into the next financial year as well. And we've been very confident about the performance in our existing mature facilities as well as our facilities in Lucknow and Patna. Both of these facilities have seen very strong growth. Lucknow performing exceptionally well in its first year itself, growing occupancies upwards of 60% as we move forward. So as we keep adding beds, we will keep filling in the capacities across the hospitals. Our mature hospitals are about 65% occupancy levels. So we feel fairly confident about the growth that we see coming in, not only in the short term, but as we look into these capacity expansions in the medium term as well. You'll see this growth continuing as we move forward.
Right.
In terms of our average revenue per occupied bed, you're right, we're at about 60,000 when you look at it at a consolidated level. But once again, we continue to see growth coming into the newer assets. We continue to see teams getting added, new doctors coming in, new services, new specialties getting added. So all of this will continue to drive us as we move forward into the subsequent quarters of this financial year, and as we look forward to getting ready for financial year 23 as well.
So you must note here the fact that this is all driven over the back of the finest quality of healthcare that can be delivered. So our patients have actually contributed to our success because of the fact that we do have that model where all the super specialists are working on the same platform and are able to give their best to any and every patient that comes into the Medanta system. So this has rewarded us handsomely, and we will continue to stick to our core of the highest quality at the best affordable price that we can give. So that's the story which is unfolding, and it has over the last 10, 11 years, and it will continue to roll out as we build and into different areas.
That is the crux, Dr. Dehan, that, high quality healthcare at affordable prices is what makes you successful. And at the same time, while you, credit your patients to your success, I would say we should also credit you to your patients' successful treatments, etc. But, as far as the markets are concerned, we're looking at the way your business grows from here, given the fact that you're doing extremely well right now, and that is obviously a given. Pankaj, just a word on the number of beds that you have right now. By the end of this year, what would that number totally be at? And what is the road to 3,500 to say 4,000 beds? Just wanted to understand, because you said currently 65% of your revenue is coming from mature beds, mature hotels, hospitals rather, and the remainder will obviously start improving, right?
Correct. So we are currently at approximately 2,500 beds across the network, across the 5 hospitals that I mentioned. That's in Gurgaon, in Lucknow, in Patna, Ranchi, and Indore. And these beds will scale up to about 3,500 by financial year 25. The bulk of that incremental capacity will come in Lucknow, which is currently operating at about 500 beds, and that will scale up to about 1,000 beds, 950 to 1,000 beds. We expect over the course of this financial year to add in maybe another 100, 150 beds in Lucknow itself. Like I mentioned earlier, construction is already on in Lucknow. We already have operating rooms being built, wards being built, ICUs being built in Lucknow as we speak. Similarly, in Patna, we are currently at about 330 beds. That facility will scale up to about 650 beds. And the same story in Patna, we are currently building about 10 operating rooms there. We have beds getting added there. So all this activity is happening as we speak, and as and when these operating rooms, beds, ICUs come on board, we will start activating them. And we're also bringing in additional services like radiation oncology services being added in both these facilities. So that will be a large part of the addition in the assets that already are operational. In addition to this, our Noida facility, for which we have already started the construction, there's already cement going into the ground there. That hospital will be about 550 beds by the time it's completed. And we expect, like I said, that to come on board in financial year 25. So these are the new beds that are coming in. And of course, we also are adding in specialties. We're also adding in doctors into our mature facilities, especially in Gurgaon. We continue to look at the greatest talent across the country and bring that into the system as well.
That's good for us, Pankaj, but give us a couple of more details. You've been stressing on new as well as mature beds, right? What is the margin difference between the two, if you could put a number to it?
So actually, we've seen our mature hospitals do very well from a financial margin point of view. As you can see in our filing information, our EBITDA margins around 22, 23% at a consolidated level. Interestingly, our Lucknow facility, which is just about 2 years operational, that actually has been performing exceptionally well in a very, very short period of time. That has actually delivered in financial year 22 EBITDA margins of about 28%. And we see the growth in that actually very strong as well. And our Patna facility, Patna just started in its inpatient services in January of this year. That's already doing very well. We had a very minimal loss of just about 2 or 3 crores in the first quarter of financial year 23. So that continues to grow well, and we see that performing and heading towards growth and profitability in a very short period of time as well. So across our mature assets, across our new assets, we see very strong growth. We see very high RPOPs. We see strong EBITDA margins across the system. And we hope that these continue. We continue, to, as Dr. Trehan said, to focus on making sure that we deliver the highest quality, highest end of care. And because of the complexity of care and because of the super specialty care that we offer, we have been able to deliver this kind of performance, even though we try to make it as reasonable as possible for the public. So this has been a model that we have followed over the last 10, 11 years, and we believe that it has led to success, and we intend to continue to stay focused on always making sure we deliver the highest quality of care.
Take that point, and which is why we'll give the last word to Dr. Trehan himself. Dr. Trehan, you know, you've been helping Indians with their medical issues. Just wanted to know how much more will you help international patients as well? Because pre-COVID, it was around 10 to 12%. Now it's clawed back to 6%. How long before it goes back to pre-COVID levels?
So it's improving month on month because of the fact that now that connectivity has been restored, and also the embassies are working like at more normal levels, so the visas are now being issued. So like even in Iraq, I mean, our own patients, about 140 of them, are waiting for their visa clearance, which is happening now. So we see an incremental, as we speak, we are seeing an incremental flow. And not only that, we expect it to go even higher than pre-COVID because of the fact that there is a big movement. Like you heard the Prime Minister launch the 2 schemes about Heal in India and Heal by India. So there is a lot of push, and all the facilities are being streamlined. Like medical visa issue is going to be in a very short time. Then there'll be a special channel at the airports when these patients arrive.
Right.
And we as providers are actually going to give them airport to airport service so that the quality of care that we can offer to internationally improves on a daily basis.
Right.
So I think that India has a huge potential, and a lot of people are seeking care in India. We just have to facilitate it properly.
Okay, all right, Doctor. Thanks so much for joining, and wishing you, your team, Pankaj, all the very best for the time being. The health is good, and your shareholders as well will be very happy looking at the returns. Well, for the time being, slip in a short break. Come back. We'll continue our focus on the markets.
At the high point of the day for the market, just 170 points away from its fresh all-time high as we speak. And it's on account of 2 engines which are fighting for the Nifty. The Nifty Bank, which has done well, and today the Nifty IT is supporting as well. With that, we're out of time on this edition of Chartbusters. You stay tuned to CNBC-TV18.